The London Metal Exchange nickels market has been paralysed once again today by glitches. It comes after, of course, that week-long suspension. When do we get to a clearing price? When does this market start to function? For the daily instalment on this story, we turn once again to Bloomberg's Mark Burton. Mark, bring us the latest.
Hi. So it was another unexpectedly frenetic and chaotic start to the trading day in the nickel market, where we had a case where there was a new trading limit imposed at 8% of the prior day's closing price. But when brokers came to put orders in at that level this morning, they found that their orders were cancelled. And that led to a rapid effort to recalibrate those trading limits to allow the trades to be placed, which they were. And then inadvertently, the LME opened the market about 4 minutes earlier and allowed a number of trades to take place before suspending it again, and trading resumed in a slightly less chaotic fashion at 8:45. But it remains incredibly illiquid. So far today, two contracts have traded on the LME's electronic market. On the day before trading closed on Monday, trading volumes were about 25,000 lots. So the market is truly paralysed. As things stand, there are about $3.3 billion worth of orders in the system to sell nickel at the limit down price. But it's now a question, as you say, of just trying to find a clearing price. The expectation is that prices are going to need to keep opening lower each day until they calibrate more closely with prices that are traded on the Shanghai Futures Exchange, which has remained open throughout this whole saga in London. The precipitating cause in all of this, of course, was the sharp rally in prices and the huge margin calls that created for bearish investors, bearish traders, and one entity in particular, Tsingshan, as we've reported. That short position still needs to be covered. And so at some point, there is likely to be a very frenetic break in this paralysis that we're seeing in the London market. It's just a question of when. Currently, the London market is quoted at about $42,000, and equivalent prices in Shanghai are at about 30,000. So we could have another few days yet of limit down trading before we.
Mark, the longer this goes on, you have to wonder if it doesn't spread to other metals or other assets traded on the exchange. Are you seeing any signs of spread, or is this really isolated to nickel so far?
Well, as we've seen, there's been a lot of commentary among hedge funds, among traders who are extremely frustrated with the way that the LME has handled this, and they're making the decision to pull their trades off the LME entirely. So there is some spillover already, and there's a question as to how bad that will become. And on the face of it, it looks like there could be some very significant contagion, as you say. And the timing could hardly be worse for the LME. You know, this has been a 2-year bull market in the metals markets and commodities more broadly. And prior to the closure, trading volumes were absolutely flying, having kind of rebounded from a fairly sort of languid period over the past couple of years.
Okay.
So to have pulling off is bad news.